Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, China's steel spot prices were mainly stable. The domestic hot-rolled coil spot prices remained unchanged, while the rebar prices dropped by 20 yuan per ton. At the macroeconomic level, the market currently expects the Federal Reserve to cut interest rates twice in 2026, with the neutral interest rate projected to be around 3.5%. Affected by the weakening of the US dollar, the RMB has further strengthened recently. Domestically, Premier Li Qiang emphasized the need to launch a number of major engineering projects that can drive the overall economic situation and expand domestic demand. Beijing has optimized and adjusted its housing purchase restriction policies, but nationwide level policies still need time to be formulated and implemented. Meanwhile, the reserve requirement ratio cut and interest rate cut are still pending. On the industrial front, the weekly output of the 5 major steel products continued to decline, decreasing by 11,500 tons compared with the previous week, while the hot metal output remained stable. Among the 5 major steel products, both hot-rolled coil and rebar production resumed this week. Specifically, hot-rolled coil output increased by 16,300 tons per week, and rebar output rose by 27,100 tons per week. The output reduction was mainly due to production restrictions and cuts. The overall supply-demand situation of hot-rolled coil has improved, leading to the redirection of hot metal to high-profit hot-rolled coil production. With the recent recovery in steel profit margins, production is expected to stabilize soon. On the demand side, the decline in demand continued to narrow this week, decreasing by 16,700 tons compared with the previous week. Among them, rebar demand fell by 59,600 tons, while the apparent demand for hot-rolled coil increased by 87,600 tons. The export quota system will be implemented starting from January 1st. At present, some steel mills have obtained permits, and most traders are in the process of applying. The specific details still need to be further confirmed. However, in the long run, this policy will have little impact on the total demand and will mainly affect the short-term market sentiment, which has also led to a wait-and-see attitude among buyers recently. In terms of inventory, the destocking rate of the 5 major steel products remained the same as last week, with an overall weekly destocking of 367,300 tons. By product type, rebar destocking reached 182,900 tons, but the destocking rate slowed down. Due to increased purchases by downstream industries, hot-rolled coil inventory decreased by 135,000 tons this week, which further eased the pressure, but the inventory problem still persists. In summary, the supply and demand of the 5 major steel products remained stable this week, with demand and destocking rates maintaining their levels. The overall inventory pressure has been further relieved, and additional production cuts have improved market sentiment towards winter stockpiling. Currently, steel mills are operating at reasonable profit levels, but there is no room for further profit growth in the short term. Otherwise, it will reintroduce pressure on winter stockpiling. Therefore, steel prices are supported but have limited room for upward movement in the near term. Looking ahead, we need to monitor macroeconomic policies and industrial sentiment regarding winter stockpiling. As steel inventory continues to decrease, steel prices are expected to fluctuate with an upward trend. However, without further promotion from strong macroeconomic policies, there will be limited room for significant price increases. In terms of procurement, it is advisable to purchase on demand. For product selection, it is recommended to choose varieties with low inventory and high cost performance, such as rebar and billets. Institutional views suggest that inventory levels will continue to ease and declining output will provide support for steel prices. However, after seasonal weakening of demand, steel prices will have limited upside potential. Meanwhile, the upcoming implementation of export quotas on January 1st will exert short-term negative sentiment on exports. In summary, steel prices are underpinned overall, but lack sufficient room for a sustained rally. In summary, steel prices have been underpinned and are poised to trend upward recently. In terms of procurement varieties, rebar and billet will show relatively stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, Don't forget to follow us for more updates. See you next week.